We're about halfway through earnings season now, with nearly 80% of companies reporting better than expected results so far after 3 weeks of solid gains for the Dow and S&P. I want to get an update now on the retail investor and where they're finding value. Joining us right now is IG North America's CEO, J.J. Kinahan. Good morning to you. Have most retail investors been playing, if you will? I hate to say playing, but have they been in this rally?
It's been really interesting, Andrew. Here's what we've seen, from our Tasty Trade brokerage side. What we've seen over the last few weeks, particularly, we'll call it a month, is more people playing individual equities. To me, that's really bullish. For a long time, you and I would talk, and our clients got up to almost 50% where they were trading the index-based ETFs, that is SPDR, QQQ, indexes themselves, SPX and NDX. Now we've seen a more normalized, where it's about 30 to 35% on those ETFs, and the rest being individual equity names. It started, of course, with the usual suspects, if you will, being Apple, Tesla, Nvidia. They're trading picking up. Apple and Tesla, we've certainly seen a lot of bullish activity over the last few months. But then what's happened over the last 2 weeks, which I think is incredibly interesting, Andrew, is Microsoft and Netflix, how much they've picked up. And if I go back and I think about meme stock time when people were buying the dips, it actually usually started with Apple and Microsoft. Microsoft, Of course, people hold because it's such a big stock, but it hasn't been one people felt they had to have. We're starting to see that over the last 2 weeks. In fact, the trading activity, measured by equity and option activity, is up 75% over the last 2 weeks for Microsoft and up 125% over the last 2 weeks in Netflix, and Netflix being a bit more bullish even than Microsoft activity. So I find it really interesting, and it's the one thing that makes me think the rally may be able to last for a little while, because people are finally, you use the term coming out to play, whatever you want to say. Right. People are starting to participate a bit more in the individual equities. That's usually a good sign for us going forward.
What's the play in terms of the ETF world, mutual fund world? We talk about the indexes all the time, obviously so heavily weighted towards tech and to what has been described over and over again as the Magnificent Seven.
And I'm sorry, do you mean what's the play in terms of which one?
No, meaning you were saying that a lot of folks are now investing on an individual equity basis, but how much of the market is still moving into mutual funds, moving into ETFs, and other kinds of index investments?
What I would say, Andrew, is that it's just become more normalized, back to almost the 30 to 35% level of the trading activity. For a while, as I said, it was just so high because people didn't know what to do with their money. They didn't have trust, if you will, in the individual names. What we're starting to see now is just more trust in the individual names. Obviously, earnings drive markets. The fact is, as you said at the top, with 80% of the companies coming in above expectations, albeit low expectations in many cases, the fact is they're still beating. And at the end of the day, when you have earnings that are beating, that's what is going to drive markets going forward. And I think the other part that people are underestimating is that many of us, and Steve referenced this a little bit when he was just talking to Becky a moment ago, many people expected this to be an earnings season where it was like, okay, we did all right now, but it's going to be not so good going forward. We haven't necessarily seen that. We've actually seen a fairly bullish tone by a lot of the CEOs and CFOs on the conference calls. And I think that's the other thing that's giving people a lot of hope and a lot of motivation, if you will, to say, hey, this is something that could be good until the end of the year. That's not to say we're not going to see some downtick. And I would warn people that, when you see a VIX of 1330, as we're seeing right now, it's something to keep your eye on for any quick spike. But overall, this has been really, really interesting.
JJ, the other thing I wanted to ask you about was crypto. We've been talking about Bitcoin sitting just under about 30,000, now about 29,300, maybe $30. Maybe we'll get it up on the screen. What have you been seeing in terms of inflows and outflows?
We've definitely started to see more interest in crypto. It isn't crazy at the moment, but we certainly started to see more. This is one product that is so price driven. As we got over 25,000.
Why has it not moved? If you look at this chart, compared to the S&P 500, the Dow, or the Nasdaq, it's been basically flat. if not down, at a time when the rest of the world's rallying? What is that? Is that looking at the Fed? Should we be putting up a Fed chart against it?
That may be. It may also be a little bit of reluctance because there's also some regulatory questions, if you will, there. And I think many people are just like, I'm going to stay on the sidelines and see what happens. And I also think that, the third part of it, Andrew, we need to break 30,000 for sort of that new ump. If you bring back up the chart you had a second ago where it shows as we went through 25,000, you saw a lot of momentum there. We get to this 27 to 29,000 level. We've sort of leveled off. We haven't been able to get that extra kick to get above 30,000. In my opinion, when we get back above 30,000, that's when you're going to see more interest again. Again, this is an incredibly price-driven instrument, much more than many others that we see, and it's truly a momentum trade, in my opinion.